So let's take a look at what we're studying here. Social Security taxes, OASDI and HI. And the first question is, who is, what is this and when did it come into fruition? We've talked about this before. So FICA is the umbrella that both of them come under, isn't it? So if you say FICA, and this is important when you read your pay stub. I'm working on this in my personal finance class, reading pay stubs. Some employers chunk them together, the 6.2 and the 1.45, and just call them FICA. On some paychecks, you see OASDI called what? Social Security. So it might say SS. And then HI is called Medicare. Or they might call them OASDI and HI. Or they might lump them together and call them FICA. So I really encourage you, to look at your own paycheck and just kind of see, what do they call them? And make sure that the calculations are correct. I can tell you over my years of working and looking at my mortgages and all sorts of things like that, people process payrolls and mortgage payments and things like that, and there's errors. I mean, I've uncovered a number of errors over the years. So pay attention to your own documents and your own finances. And then, of course, this 0.9% on HI that we just discussed. So what happened 16 years after FICA was Congress realized that self-employed people weren't paying it at all. How come? In 1935, it comes in, your employer's going to take out 7.65 and match it. But what happened to self-employed people? Well, they weren't, you are your own employer. So if you weren't holding up your own money and matching it, you weren't really paying into the Social Security system. So they passed a second piece of legislation specifically targeted towards self-employed people, and that was called SECA. Right? And so basically what it's saying is you've got to double all these numbers, right? We've talked about this before. So what I'm kind of saying is we're going to be working with a lot of percentages in this unit. So 6.2, 12.4, 1.45, 2.9, 15.3, 7.65. Those numbers have to be fairly easy for you to extract and understand when you apply them, because we're going to be doing a lot of situations. For example, somebody's got a W-2 and they're self-employed. Well, part of their income is only subject to what? What percentage? If I'm employed, how much is coming out of my W-2? $6.2 plus 1.45, right? 7.65. But then the amount that's self-employed, how much do I have to pay? I'm going to write those numbers down. You need to learn these numbers. Let's do that. You okay there? Okay, let's focus. Okay, oh yes, let's see if we can get this thing to focus. There we go. Okay. So if I'm an employee, again, help me fill this out. How much am I paying HI? 1.45. How much am I paying OASDI? 6.2. Therefore, what's my total? Not a trick question. What's my total? Okay. 7.65. Great. If I'm an employee, that's all that we're dealing with, right? But under SECA, I'm both what? Employee and employer. So the numbers are all duplicated. So therefore, if I say to you, under SECA, how much am I paying HI? What's your answer? 2.9%. And how much am I paying OASDI? 12.4%. And what am I paying in total? Right, 15.3, 7.65 plus 7.65. So when I say to you, that's a little skewed, sorry. When I say to you, you need to know these numbers, I mean, you do need to know these numbers because we're going to be dealing with situations, for example, where my W-2 equals 81,000 and my self-employment income equals another 50. And then the question is, well, how much did I pay in to the Social Security, to the FICA system? You see what the challenge is here already? My W-2 is all susceptible to what percentage that's sitting up there? At 7.65, right? An employee. What happens with the 50 grand though? Can I just go down and hold a 15.3% number? Yay or nay?
No,
Why not?
because it's not necessarily what you brought home.
Well, no, that is, I am giving you that number. That's my self-employment net income. But what happens when you add the W-2 and the self-employment income together? I'm over the cap. So you see how this can get tricky really quickly? Okay, so on that 50,000, what do I have to do? I've got to parse it out. I know that I've got to be 2.9% on everything, right? Because there's no cap, is there, on HI? But on the OASBI in the 12.4% section, only up to the cap is taxed for that. Okay, we'll practice it. But what my point at this stage of the game is, you need to know this little matrix pretty much inside and out. Because when we start playing with these numbers, I don't want to have to spend a lot of time going back and explaining where the percentages come from. I want to explain how to do the calculations. So you should, write this down and have it, handy to look at while we go through this, because this is going to be kind of your tool that, after you use it for a couple days, then you put the tool away, but you're learning it right now. Does anybody have any question how this is presented? Okay. And then maybe I should also write here too, the cap here pertains to total. Meaning, like in this example, I made 131 grand. Oh, jeez. I think the design on this camera needs a little fine tuning. I don't know why it does it every single time I make. The cap applies to the total of all my income, doesn't it? Okay. Anything more we want to talk about this? But make sure you get this written down somewhere where you can use it. All good? So basically, the issues that we're going to be looking at, and this is now probably the fifth time I've introduced this concept, is are you an employer, are you an independent contractor? And again, that's really, really critical, because if you're an employee, your expectation is that you're only paying what percentage in total for FICA? 7.65. And if you're an independent contractor, you're paying 15.3, which are two very different numbers if you're talking about take-home pay, isn't it? Right? So you need to be really 110% sure when you enter some sort of relationship for compensation with somebody is, which am I? Right? Secondly, is the service rendered considered employment? And third, what specific things are taxable? What are considered wages? There are some kinds of compensation that aren't susceptible to FICA. Okay, we beat the horse a number of times about the difference between an independent and an employee. So I just kind of want to go and talk about this. These are all items that through litigation or some sort of lobbying effort by an industry group has resulted in very specific occupations that are covered. So if I'm a full-time life insurance salesperson, or I'm like, I drive the Schwann truck, right, I'm a commission driver, or I'm a full-time traveling salesperson, or I'm an individual working at home on products, like I'm assembling things or stuffing envelopes at home, I'm by nature, by law, statutorily covered under FICA. In other words, my employer can't say to me, oh, you're an independent contractor. Okay, so these are non-negotiable. You don't have to go to those 3 tenets of behavioral control, financial control, and perceived relationship. We just know that you're covered by FICA. So these are statutory, means these are without impunity, are located in law, statutes. So if your employer, if you're working for somebody and they misclassify you, there's penalties. So for example, if you guys all write code for me for my software company, and I treat you as independents, but when we look at the tenets of what you really do for me, you're really my employees, I'm doing that probably to get out from underneath 7.65%, right? And FUTA and SUTA and workers' comp and filing payroll tax returns and filing W-2s. I don't mess with all that, I just call you independents. But you're not really independents. And I get audited for somebody files a wage claim and I get caught. What happens? Well, my penalty is equal to everything I haven't paid on all of you for FICA, plus your share of FIT. So think about that. If you guys each earn 40 grand, 2, 4, 6, 8, 9 of you, that's $360,000 times 7.65%, right? So around 30,000 plus your share of federal income tax you should have had with that. So I'm going to be penalized for all that. For a lot of companies, I just shut you down, right? Because now you have a government lien against you, right? So it's a pretty big deal. However, that's all waived if you reported the earnings on your 1040. What does that mean? First off, what's a 1040? It's your tax return, right? It's an individual tax return, a 1040. So what are they saying here? If I paid each of you $40,000 a year and I misclassified you, but you took that $40,000 I paid you and actually put it and recorded it on your 1040, then what did you do with that $40,000? You had to pay the 15.3. You had to pay federal income tax on it.
So if you leave it as a check and balance here when misclassification is kind of found in 1040, is there a way to check and find it, or is it just? So
basically, this is usually found on, interestingly enough, is in a workers' comp audit. Because workers' comp, they have a voracious appetite for finding small businesses that are misclassifying people as independent contractors. Because if you all work for me, I have to pay, as employees, I have to pay workers' comp. Yeah. So that's how it's usually started. Then the cross-check is definitely here. Did you report it as income on your tax return? What's a 1099 miscellaneous? That's what I send you if you're an independent contractor. Now, that's important because there's a whole different paper flow for independent contractors versus employees. When you come to work for me as an employee, what do I have you fill out that tells me whether you're single or married, whether you have dependents or not? A W-4. You fill out a W-4 when you come to work for me, right?
So W-4, we thought would go in, and then the W-2 is what we get at the end of the year?
Right. So as an employee, you fill out a W-4, and then at the end of the year, I have to send you a W-2, right? Okay? If you come in and the understanding is that you're an independent contractor, what do I get from you? Anybody know this?
I know you said it before, but
If you're an independent contractor, all I get from you is something called a W-9. And a W-9, all it says is what's your name and social security number and your address, right? I don't care if you're single or married. I don't care how many dependents you have, because I'm not withholding any tax, am I? I'm just cutting you a check based on your invoices, right? Then at the end of the year, what do I have to send you? That is the 1099 miscellaneous. But only if you were over 600 bucks. In other words, if you came and worked for me, and you did one job for me, you came in, you did a training seminar for my employees for a couple hours, you billed me 250 bucks, I don't have to cut you a 1099. Only if it gets over 600 bucks. Okay, so do you understand the difference in the paper flows there? Okay, and then the book goes through some specific situations. So if you have a federal government job, and this is something that gets under people's craw, there's a different healthcare system and there's a different retirement system for federal government employees. Okay? So in some situations, depending upon your classification, you may not pay into OASDI and HI if you're a federal government employee. You may have a completely separate retirement system. Okay, so be aware of that. In-patriot. Does anyone know what an in-patriot or an expatriate is? Have you ever heard the term expat? What does that mean? So an expat is somebody that retains their U.S. citizenship but works and lives in another country. So last year we were in Panama, and there's whole communities of expats there. Very, very cheap to live there. They have a great national healthcare system, single-payer healthcare system. Lots of older folks, say 60 to 70, that still want to work and can work digitally, go down there and they're expats, right? They don't give up their U.S. citizenship. They don't have a Panamanian visa or passport, but they're living in that country. In-patriot is exactly opposite. That would be if a Panamanian came and worked and lived here, but kept his or her Panamanian citizenship. So in-patriots, and we have agreements with 20 countries, may be exempt from FICA, because why should they be paying into FICA? They're never going to collect on our Social Security system. Okay? But expats are subject to FICA. So if I'm living in Panama or the Congo or Kuwait or wherever I go work, and I'm working for an American company, I still have to pay into FICA. Right? But obviously if I'm working for a Congolese company, they're not going to be withholding FICA. So you see how that all sort of plays in? So like the people that we met, for example, in Boquete in Panama, many of them were self-employed. They were digital publishers, or they wrote code, or they did systems analysis digitally, or whatever. They still had to pay into the FICA system even though they were living in Panama, right? Because they're still subject to FICA. And then another very specific situation is if you employ your kids in your business and they're under 21 years old, and you're I think you have to be formed as a sole proprietorship or an LLC. That gets a little too detailed. But in general, you can exempt them from paying FICA. So if I have a family business, we've got a hardware store or medical device store outlet, and I have my kids work for me that are 17 and 20, I don't have to pay FICA. I don't have to withhold. I don't have to match. And so that's a good tax planning technique if you've got a family business. Household employees. We talked about this, I think, in the first chapter. This comes back to folks that work in your home, right? I've got a nanny, I've got a chauffeur, I've got a gardener, what have you. You have to pay FICA on them, withhold from their pay and match if they make more than $2,000 in any given year. Additional exemptions, who doesn't have to pay, if you work at a proud employee of a penal institution, you don't have to pay in FICA, medical interns, student nurses, and temp workers, emergency workers. Okay, so we've talked about this sort of ad nauseum. I'm not going to go too much more into this, but obviously, if I hire you as an independent, that last bullet, you're covered under SECA. You are going to be liable for your own Social Security taxes. And sort of the key words here are the last two on the slide, which is net earnings. So back to the example for you guys are all coders for me, and I pay each of you $40,000. And I issue each of you a 1099 miscellaneous at the end of the year for $40,000. Is that what you pay the 15.3% on? Is that your net earnings? No, you're liable to pay all your own taxes, but I'm just trying to get you to think about, is the amount that you receive on the 1099 miscellaneous, is that necessarily what your net earnings are? No. Like what kinds of expenses might you have? Yeah, if you drive somewhere, you've got to go visit clients in order to talk to them about the code, or you need to go load it on their computers to see if it integrates with their system or whatever. Basically, you might have driving expenses. What else?
Sorry, just to be clear, 1099 is with the, sorry, I'm confused about who gets this.
You're fine. 1099s are given to independent contractors from me. So you guys all write code for me, and I issue you each a 1099 miscellaneous at the end of the year for $40,000. I'm trying to get you to think about, is that what I'm paying the SECA on? Is that the same as my net earnings? And Amanda said, no, you might drive places, right? So then you get to write off the cost of some mileage. What else might you incur as an expense? Yeah, you might have supplies, sure. What about, I bought a new laptop. I had to upgrade my printer. I had to, what about paying for, go ahead. I've got to pay for malpractice insurance. I've got to pay for my wireless access, right? You can even get a portion of your home if it's dedicated specifically to your business. So like in our house, we have a 10 by 12 foot room that's just an office. So I can write off a portion of all the costs of my house, right? So my point is that net earnings is not the same as gross earnings. Gross earnings is what I 1099 before. I have no way of knowing what your net earnings are, right? And those are going to be different for each of you. So when you have net earnings, or when you have a 1099 miscellaneous, you can't just go to your 1040 tax return like you do with the W-2 and just throw it in line 7, right? You've actually got to fill out a form where you've got, oh, here's my 40,000, but here's all the things I want to take against that, right? You might get your net earnings down to 22,836, right? But it's going to look different for each of you. Okay, are you clear on that? It might be worth going back here and just putting one more line on this. So to finish this sort of then, your W-2, and I'm sure most of you have had W-2s in your life, where do you end up recording that or reporting that or paying taxes on that? Yeah, it just goes straight to your 1040, doesn't it? And if you have a pretty simple situation, you don't have any kids, you don't have any other income, you don't have anything else complicated going on, you might even fill out a 1040-EZ or a 1040-A, right? But the point is, it goes right to the face of your tax return. This goes, your 1099 miscellaneous, first goes to something called a Schedule C, where you report the 40 grand and then all of your expenses. And then it moves on to the face of the 1040. Okay, so it's obviously a lot more complicated to be self-employed, isn't it? You've got to get your own taxes to the IRS quarterly. Most people are going to end up going to an accountant if they have to file a Schedule C, right? So just be aware when the guy says, oh, I'll pay you $1,500 to come, do whatever, paint my house, that there's going to be a lot of things that go with that. Did we talk about what you have to do if you're an independent contractor, how you get your quarterly taxes to the IRS? Does anybody remember that? How do you actually get your, can you wait till the end of the year and just pay the IRS with your tax return?
Quarterly estimated.
Yeah. These are your estimates. And you've got to pay quarterly 15.3% plus what you think you're going to owe for income tax on a voucher called a 1040 ES. I mean, there's a lot to it. People, a lot of times when people become self-employed, they just don't understand this whole process. And then they'll come to me at the end of the year and be like, can you do my tax return? And first off, the amount I bid them is more than they want to hear because I've got to go through all this. Secondly, they haven't made any estimated payments, so they're going to owe a buttload. And third, they're going to get penalized because they haven't been making their estimates. So they're going to owe a bunch of tax plus penalties. So are they very happy? The fact that they took this $1,500 job, not even kind of. So just be aware of that.
How much of the penalties are they on, like some sort of sliding scale?
It's a percentage of the underpaid tax.
Is it a lot?
And
Is it a ton?
Well, it depends on how much tax there
I
is.
guess that's true.
So, and the reason is because those of us that have jobs, do we get to hold on to our money all year and not pay the IRS till the end? No, we get money taken out of every paycheck, don't we? And it goes straight to the IRS through a deposit system. So basically the train of thought is, if you're self-employed, why do you get to hold on to your money all year and only have to write out one check at the end? Right? So, I mean, it's fair enough. It's just that most people don't know about it. Questions? Has anybody ever had anybody get in this situation?
You like do your estimate and then like at the end of the year, you realize your estimate was like too high, you had write-offs that can cover that, can you get money back?
Sure, good question. Let me just repeat it for this. So the question was if you overpaid your estimates, and then at the end of the year you do your Schedule C, and it's like, oh my gosh, I gave the IRS $4,500 and my tax bill was only $3,800. Generally, what happens in that situation is rather than get the check back for $700, you apply it to your estimates for the next year, and then reduce your first estimate in the next year. And if you've got a good accountant, they'll help you manage that. Because why would you get a check for $700 and then write out your first estimate for the next year? You would just reduce your first estimate. Good question. Okay.
You have to pay something like that.
Yeah. What, do you have anything that
My
would be?
wife's doing it right now.
So does she have somebody helping her do the estimates?
She didn't even know about it. We just got the IRS finally and she didn't make her estimate, but she never knew about it.
Okay. So has she had 1099 miscellaneouses in the past? This is her first. Do you feel like based upon what we've learned that you could calculate that for her?
I can calculate for it, but I don't know how you know if they have to do all that.
Okay, I'm gonna just, and for anybody's information, this is really just good life information to have. For any, it's really quite easy. I mean, you're a brick guy. Go to irs.gov, and there's a tab on there that says Forms and Publications. And in that field, you're just gonna type in 1040 ES. And really, I mean, there's like, on the instructions, it tells you where to send them. if that's based on what state you're in. I think we send ours to Fresno. And it tells you what dates they're due 4 times a year. And if you can do the calculation, gosh, she's just made $3,000 in the last 3 months. And I'm just going to say, let's pretend you're in the 15% federal income tax bracket. So help him out. What would he multiply his wife's $3,000 of net earnings by in order to make his first estimate?
Kind of analyzing something, or you can take a year and then you get a quarter?
This is 1 quarter worth earnings. She made $3,000 in the last 3 months on her 1099 miscellaneous. And let's say she's got no write-offs. There's nothing she can take against her. I'm just trying to simplify this. My question is, if he's in the 15% federal income tax bracket, what does he multiply that number by? Yeah, so what does he multiply it by? Well, 0.303, because he's got 15.3% FICA, right? They've got to pay 15.3% FICA, and there's a federal income tax bracket of 15%. He's got to write out a check for $909. That's my point. It throws people like, oh my God, did she make $3,000 at all? No, she made $2,100. Okay. This number, you will find, actually it asked me to help you look at that in the payroll book. It's in the appendix of our payroll book, and I can kind of tell you where your income tax bracket is. Cool. Okay. But that's really important. It's also pretty important if somebody says, which happens all the time, well, I'll pay you $17 an hour if you're an independent or $15 an hour if you're an employee. And people are like, oh, I'll take the 17. And it's like, you just got that covered. I mean, that is not to your benefit in any way, shape, or form, right? But people hear the 17 and think it's great. Okay.
Sorry,
Go ahead.
another question. In that example, when you're paying your FICA as a self-employed person, it's on net, not gross,
It's on net earnings.
and that does not include the things that you deduct.
Net earnings is after the deductions.
Okay.
And the example that I just made it really simple,
Oh,
I said
there
his
are no
wife got $3,000, she had no write-offs, but that's not realistic either.
Okay.
She probably would have something she can write off against it. So you would subtract all that before you did the times 0.303. Does everyone get that? Okay, what else is taxed for FICA? A lot of people don't realize those fringe benefits. All your fringe benefits, not all, some of your fringe benefits that are specified in the Internal Revenue Code are taxed. Like what? Like here, you just made project manager 3 at this construction firm, and so now you get a truck to drive, right? It's a new Tundra or whatever. You're going to have to pay tax on the imputed value of driving that truck. They don't give you title to it, they own it, but you drive it. And you drive it 500 miles a week for work, but then you take your kids to soccer at night, and you drive it all weekend, and you go camping in it, and skiing in it, and what have you, right? It's personal use of a corporate car. End of the year, you've got to give payroll a log that says, I drove X miles for personal use, right? I drove 10,000 miles for personal use. If they gave you a brand new Tundra, you're going to go to the table that the Internal Revenue Code produces for every kind of car that goes back for 30 years, and the mileage, the per mile amount is going to be high, because that's probably a $60,000 rig, right? Maybe 70 cents a mile. So 10,000 miles times 70 cents, you're going to have another $7,000 put on your W-2 that you've got to pay taxes on. If they give you an 82 Pinto, it's going to be 3 cents a mile, right?
Is that into the employee or employee?
Employee pays on it.
So if the employer having to not do that, is that the bad thing. So you must count as a value.
It's all a bad thing if you get audited. Okay, but my point is, when somebody comes to me and they're like, woo, getting a Tundra. You know, and I'm like, great. And it's free. And I'm like, no, it's not.
I'm gonna play that.
Yeah, I mean, it's still a whole lot. You know, it's a huge value. I mean, you don't have a $900 a month truck payment, and you don't have to pay repairs and insurance. I mean, it's still a huge value, but also when it just grounds you a little bit, it's not free.
But employers are paying, when you are accounting for like in your business tax, you know, you're saying like this is the cost of this vehicle.
Yeah, the employer writes it off,
Yeah.
right? I write off,
But
but then the employee gets taxed for the personal use of the corporate car. Because you don't have to buy, you don't have a car expense in your own personal budget now, right? Okay, bonuses, obviously, tax, shows up on your W-2. Premiums on group term life insurance, what the heck does that mean, group term life insurance?
It's not like a pool where it's a communal thing and almost like a small scale social security.
No, it's really the term group term. I guess I don't want to go so much into this, but basically what it is a lot of employers will provide for everybody life insurance in the amount of like 20 grand. I think here at the university, if I die, my family get 25,000. Okay, is that intended to take care of my kids and my spouse? No, it's intended to bury, essentially. So if you have a face value of a life insurance policy under $50,000, right, that I pay for all of you guys work for me, that's not going to show up on your W-2. But if Kaylee is my CEO, and I have $1 million face value policy on her, the premiums that I pay to cover her at that really high level, that is going to show up on her W-2. Right?
On whose W-2?
On hers.
On hers.
Yeah, the premiums for all of you are based on how old you are and whether you smoke or not, and whether you're male or female, right? So my premiums on y'all, you're all pretty young, healthy, okay, it's gonna be nothing. It's gonna be cheap, it's gonna be $50 a year for each of you. But the $1 million on her, I mean, that's a big face value, right? So I pay $2,000 a year premiums for her $1 million policy. That $2,000 is gonna go on her W-2. But you guys aren't gonna see the premiums I pay for you on your W-2. So again, we're talking about benefits, ways of compensating people that isn't just cash. So she comes to work for me, she's like, I want a corporate car. I want a $5 million face value life insurance policy to cover my husband and kids. I want, there's a whole bunch of other things that aren't up here, but I want the one with a country club, and I want to be able to use the company jet twice a year for private vacations.
Gym memberships.
All that, athletic clubs, country clubs, blah, 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 blah. In our little world, most of us don't have that, and that's not a really big deal in Missoula, Montana. But I can tell you, when you get out of here and go to major markets, those are pieces of the compensation packages. And those are great, you negotiate away, but they're not free. They show up on your W-2 and you pay tax on it. Now, how much tax? If we're talking the kind of package she's negotiating, she makes over $118,500 a year, so she's not paying what? She's not paying OASDI. So it's 1.45% Medicare plus what? Federal income tax and state income tax. You guys with me? Okay. So we've talked about tips. This is going to take the last 4 minutes, and this is, tell me what you know about tips so far. What have we talked about taxable tips so far? What do you know about it?
Tip employees in certain states have part of their wages taken away and only taxed on a certain amount by the employee or employer, I'm sorry.
Okay.
And then they have to send in their own quarterly estimates on tips that they earn. Sorry, I'm going all around.
No, you're good. So basically, tips are taxable, right? We pay federal income tax on, we pay FICA on it. How does the employer know how much tips you earned? You have to report in, right? You have to tell them. And if I make more than, I think, what is it, $20 a month, this Form 4070 in the old days was a piece of paper. Now most of us, if you work for a food or beverage outlet or you're regularly tipped, you can check out of your number at night, you've got to input how much tips you got, right? And a lot of systems will cross-check against what you made on the cards that night. So if your debit card run said that you made $186 of tips and you under $72, you're still not going to be able to check out because you've underreported compared to your debit card, right? So there's a series of checks that go through that. Okay. Then what happens to those tips? Well, they take the tips and they add them to your wages and then they withhold tax, right? So we've talked about what happens if your wages for the week are $85.20 and your reported tips for the week are $400. Could you run this person's paycheck for me? So do that. Set up this paycheck, gross minus OASDI minus HI, and just, this isn't correct, but just use 10% for fit. So you're going to actually set up this person's paycheck. This is for 1 week, 1 paycheck. I pay minimum tipped wage. Minimum tipped wage, $2.13 an hour times 40 hours, right? And then I got from you a Form 4070, and it said that I made $400 of tips. Showing I did want to talk to him. I did. Yeah.
Probably to 15% today.
10. How much is the gross? Right, I'm running the check. She's got the $400 in her pocket, but I'm only paying her a gross paycheck of what? $85.20. But I've got to take taxes for the whole chunk of $85.20.
Now, I was getting a little confused because do they take the taxes up to minimum wage or just the 85.20?
One more time.
Does your employer take the taxes for just the 85, or let me phrase it this way. They take taxes out on the 213 that they pay per hour, or they take
No, that's what I'm saying. These calculations are all what?
Right,
My point is this, I didn't realize it was gonna be so close, but her taxes were like 44 cents more than her gross paycheck. So does she get a gross paycheck at all?
not really.
No. Okay, let's just leave it there. You don't have enough, I didn't get far enough in the lecture for you to do all your homework for chapter 3 for Friday. So just do the review and the discussion questions, please, and read chapter 3. Okay. See you on Friday. Have a good week. Or for some of you, I'll see you in an hour. And I do post all these recordings.